In this section, we're going to provide a method for calculating landed cost that is more in line with what many importers face in terms of multiple products going into the same container, different countries of origin, different units of measure, etc. As such, this section is a very good setup for that more advanced case study we have coming up. To summarize what we saw in the previous section, let's just all agree that given all of the challenges that we've talked about, it is unlikely that a landed cost calculation for a given product will ever be 100% correct. We've already said that initial landed cost calculations are estimates, a prediction of the future, if you will. And much like the accuracy of a forecast for sales of a product, a prediction for a landed cost of a product is very unlikely to be 100% correct. As we've said a couple of times now, the real trick lies in prorating costs with multiple units of measure. Hopefully, we made some progress in illustrating that point in the previous section. The goal is to capture all costs and express them as an item-specific dollar-denominated figure. Admittedly, and while not optimal, oftentimes the use of average costs is the most realistic approach to take. Let's forge ahead and see what we're talking about. As we saw previously, the first step in calculating a product-specific landed cost is to determine all of the required inputs into the equation. Remember, if we want an accurate output, a landed cost for a specific item, we have to be as granular and as accurate as we can with the inputs. To summarize, in general terms, required inputs include the item or product number. We have to know what we're dealing in. The item number for the 19-inch flat screen TV, as we saw. The item number, if we recall, was DLG. What's the product description? What is it that we're looking at? What's the Incoterms rule? We've talked about that enough. What's the unit cost of an item? What are the dimensions of the master carton, the actual carton that the item or a number of the same items comes in? DIMs are very important. Other considerations? Starting off with the case pack quantity. We talked just a second ago about the dimensions of a carton and the weight of a carton. Well, what about how many items go in a carton? The CPQ, the case pack quantity, we need to know that too. As we saw in our example on flat screen TVs, we need to know the HTS number, the Harmonized Tariff Schedule Classification number. We need the country of origin. Customs duties in the United States are heavily influenced by the country of origin of the goods. We need to know that. Based on the description, we can determine the HTS number that's going to tell us the duty rate, 5%, as we said in our previous example. What size ocean container are we using? 20 footers, although we don't recommend that. 40 footers, 40 high cubes, 45 footers. And what is the ocean container utilization? You will recall that for purposes of simplification, we assigned a 99% utilization to the container we looked at in the case of the flat screen TVs. For a bunch of different reasons, it's unlikely that any importer is going to achieve 99 or 100% utilization of a container. We're going to work that factor into our math in the upcoming case. Other required inputs, summarizing much of what we talked about in the previous section. What are the origin charges, terminal handling fees, security fees, etc.? What's the charge for ocean freight or air freight? What's the customs clearance charge or charges? Our example showed a flat fee of $85, but there could be additional charges as well. Destination fees at the U.S. ports, again, terminal handling, demurrage, etc. The U.S. drayage charges, that's the short-haul trucking from an ocean terminal to a close-by destination, typically a deconsolidation center, which must include, as we see parenthetically, charges for use of chassis, and then any domestic U.S. transportation charges to get the merchandise from the first port of entry to where they need to be for distribution throughout the United States. As a first step, we have to identify those inputs, identify the unit of measure of each input, and put a dollar amount on what that charge is. As we note in the first bullet point, the simple reality of importing into the U.S. is that certain import models facilitate the calculation of item-specific landed costs. The best example of that is what we saw in the case of the flat screen TVs. One item in one container size, one unit cost, and while that does go on in the import community, there are much more complex scenarios. With that said, second bullet, the more predictable the model, the greater the level of landed cost accuracy. Of course, that makes sense. It's not that complicated. It should be easier to do. As part of what we'll call a best case scenario, we will include the following characteristics. This should sound familiar. The item is sourced from one country. And even if an item is sourced from multiple countries, it has the same duty rate. That's not often the case, but we're saying so in that best case scenario. The main mode of transport is ocean freight, so we don't have to be mixing in air freight and calculating between the two and such. Other best case scenario factors include the use of 40 high cubes and 45-foot high cubes, no 20-footers. Container charges is something that is referred to as common rated, meaning at least for 40 and 40-foot high cubes. Well, what does that actually mean? That the rates we as the importer negotiate with the steamship line or the ocean freight forwarder, the ocean transport intermediary, as it's technically called, we get the same ocean freight rate from, say, Ningbo to Los Angeles for a 40-footer and a 40-foot high cube. That's called common rated. That's going to make landed cost calculations a little bit easier. Consistent with that theme, we'd like to have our port pairs also common rated by country. And this is not unusual to see U.S. importers will have the same ocean freight rate in place for 40s and 40-foot high cubes, but for freight going from Shanghai to LA Long Beach, from Ningbo to LA Long Beach, from Xiamen to LA Long Beach, from Yantian to LA Long Beach. Common rating as a negotiating tool as an importer is good for a lot of reasons. A very clear one, as it relates to what we're talking about now, is that it makes it easier to calculate landed cost. Another factor we'd like to avoid is no peak season surcharges. No extra $500 from July to October to import ocean freight from Asia to the United States. That's what we mean by a peak season surcharge. Depending on the volume of cargo moving, the time of year, etc., sometimes importers can get away without a peak season surcharge. Sometimes they can't. We're saying that the best case scenario has no peak season surcharges. Out in the real world, we're likely to have to account for that. Let's put up a supply chain perspective that analyzes this whole idea of case pack quantities and landed cost, CPQ as we've called it. As noted previously, an accurate landed cost for a product cannot be calculated without specific information on the characteristics of the product as well as its packaging. Among other factors, it is essential to have certainty on things like product description and country of origin, as well as its weight and carton dimensions. Another key characteristic that must be ascertained in order to accurately calculate an item's landed cost is the case pack quantity, the CPQ. We've talked about this a number of times. Let's hit it again for good measure. Basically, CPQ is the quantity of a given product that is packed in a single carton. Depending on the nature of a product, its weight and dimensions, the actual item itself, and the type of packaging used, CPQ can range from 1 to several hundred units in a carton or crate. For purposes of landed cost calculations, CPQ must be agreed upon with vendors long before goods are ever shipped. Let's put it this way. Without knowing the CPQ of a specific item, it's almost impossible to get a good, accurate landed cost estimate. As another point in our last paragraph, in addition to establishing CPQ well in advance, vendors should not be allowed to change CPQ without first consulting with the U.S. buyer. This happens more often than one might think, where a vendor, for very simple reasons, i.e. they only have one kind of carton around, when an importer's purchase order is being manufactured, they use that carton. And it might be a CPQ of 6. Next month, it might be a CPQ of 12. We can't have that as the importer. Additionally, if the U.S. importer buys the same items from different vendors, the importer should stipulate the same CPQ for all of them. As one can envision, unapproved changes to CPQ or different case pack quantity for the same item from different vendors will only serve to diminish the accuracy of an item-specific landed cost calculation. That's going to wrap up this section. And when we come back, we'll go deeper into this method for calculating landed cost. Please come back soon.